Peace and welcome to the official Pips Over Money YouTube channel. Sincerely appreciate you for checking this quick video out. And before we jump into it, make sure you subscribe to the channel, turn on notifications so that way when we do drop new videos, you will be in the know. All right, we're going to shift to dropping videos on Sundays and Wednesdays. So put that on your calendar. Sundays and Wednesdays, you can expect to get new content, fresh content that's going to help you with your Forex trading. Now, in this video, we're going to be talking about how to trade without using any indicators at all. It's so newbie friendly that for me, here's the thing. I didn't create this strategy at all. Like, I'm not going to be able to take credit for it, but I've used it personally and I understand the why behind it. And that's why I'm going to explain, because you may find someone else that uses this strategy, but they may not be able to explain to you why it works. So I'm going to explain it. We're going to look at it in TradingView. We're going to see how it looks to give you a simulation of what it would feel like when you're actually using this strategy in your trading, excuse me. So let's go. Let's jump right into it. So we talked about in the last video, or one of the more recent videos, simplifying your trading, right? So at the end of the day, we want to simplify. That looks like a 5, but it's not. We want to simplify our trading. And so when you think about what trading is simply, we know that there is an option to buy and there is an option to sell. Now, this actually gives you a little bit of the strategy, if you will. So we know that there is an option to buy and we know there is an option to sell. So in keeping it simple, what I've seen be used by, even sometimes I see seasoned traders use this particular strategy to have a consistent win rate. Now, I bring that up because having a conversation with a trader that told me straight up that his winning ratio to losing ratio was this. I'm going to draw it out because you guys know I like to draw and use my art degree. So his winning ratio was 50-50. Now, one may ask, how can you lose 50% of your trades and still be profitable? How can you only win 50% of your trades and be profitable? And the thing about it is, I think we, I won't say, just in general, there's this desire to want to have 100%, like you want to win all your trades. And some people will highlight winning trades, and I get why. I mean, the reality of it is you want to reinforce what you want, but there is a way to create substantial income for yourself and only maintain a 50% winning ratio. Now, with this strategy that we're going to be talking about today, the winning ratio happens to be, and keep in mind, I'm not able to guarantee what your winning ratio with this is. Just the statistical or mathematical ratio that exists is 66%, right? So 66%. And so the question of what is this strategy is on your mind right now, and we're gonna talk about it, right? And so I lovingly refer to this as the magical third. So that is something that's a gift from me to you, and feel free to use it whenever you want. So the magical third, right? So essentially the way that this works, it's 3 trades, right? So 3 trades, and I'm going to show you what it looks like, right? So 3 trades. Let's just say that you are looking at a market and it happens to be doing this. I know these look like random lines, but trust me, they're candles. Trust me, they're candles. And so you get a candle here that does this nice little bearish buddy. a little bearish, buddy. A little bearish, buddy. And then you get a candle like this. Let's just say something like that, right? So maybe you're like, this could be a reversal pattern. This could be a continuation pattern. Am I at support? Am I at resistance? We're just stacking up these, right? You're stacking up the questions. Should I buy? Should I sell? How many pips? What should be my stop loss? You just all of these are great questions. Okay, fantastic questions. Now, the way that the magical third relieves you of having to have more answers, I'll say that's the best way to explain it, is that essentially what you would do is when it gets to this point, you would place the red line is going to be a sell trade, and this green line will be a buy trade, right? And so now, magical third, right? 3 trades. We're over, halfway there. So you have 2 trades, one buy, one sell, and ideally you want to get these as tight as possible. And I'll explain why in just a second. But what will happen is, let's just say that this market decides to do something like this, right? And so now, let's just say it's something like that, right? So now you're like, oh boy, I know what this is going to do, right? And so now it's like a situation where you're like, yep, we're going down. And then with the magical third on your side, maybe it does something like that, and then just continues to go all the way down, right? So one of the things I want to point out about these 2 trades, and this is just a recommendation, you can do this, make this your own, right? I give this to you because it was given to me and it's not mine and I don't own it. So I typically recommend on these trades just to do smaller lot sizes. Now, that's what I recommend. Now, personally, have I done smaller lot sizes? Yes. Have I done larger lot sizes? Yes. But I mean, because these trades will have a certain amount of equity that's locked in, like no matter how far up or down the market moves, the equity will be locked because it'll just control it, basically. You know what I mean? So you can, if however you want to decide what you want these actual trades to be, that's your decision, right? But the magical third trade would be your, if you were in a position to trade, a lot, that would be a lot. Or, whatever your trading account permits. So that's the how, right? That's exactly how to do it, how to make it work. Now, what we're going to do is look at TradingView because they allow you to do the replay. So I think in a simulation situation, this will be fun so you can actually see how it will work. Now, a couple of things before we do that. Now, as far as when to place this third trade, it depends on a couple different variables. It could depend on how long you intend on staying in the trade. It could depend on the time frame that you're on. It could depend on your own take profits, your own stop losses. Those are things that you'll have to develop on your own. All I can do is lend you this strategy for helping you to really see what way the market is going. It makes it easier to see because now you have something that can really give you an indication. Like if the market pulled all the way up here, then obviously the buy is winning, right? So, all right, that was just to throw that out there. So let's head over to TradingView so that way we can actually look at how this would look on the market. Now, for whatever reason, it's on the 15-minute chart. All right, so we're just gonna replay, right? I'm just gonna randomly, boom. All right, so this is where the market is. Okay. All right, so let's just say you saw this and you said, okay, let's try this magical third out. So your sell trade is going to be up here, right? And your buy trade is going to be down here. I'm going to change the color, but let's do that, right? Boom. Okay, now let's play it. Let me slow this down. Oh, it's on 3 seconds. Yeah, let's do 5 first. Okay, so we're in the trade. We're in the trade. Okay, okay. Ooh, all right. So now, this is an hour later. You notice that the market was really, this is like emotion. This is exactly what happens while you're trading, is that something emotion, like something, not necessarily random, but something like this happens and you could get freaked out, but we'll just keep playing. All right, let's see what the next one says. Okay. Okay, so let's say that this particular candle gave you the go ahead, right? Let's just say, okay, well, this candle closed below your buy entry, so you feel pretty confident that this market is going to go down, right? So now you're in and going to go ahead and put in your magical third. So let's just put that there. And okay, I gotta make that better because that was a little crooked. All right, boom. All right, so now we're gonna play it and see what happens. Come on. 5 seconds seems like a long time. Oh, okay, switched it up on us. See what happens. Okay, okay, okay. See what happens next. It's like watching a video game. I could probably do 3 seconds, but I like the 5 seconds because it gives you time to really look. Oh, nice. Okay, and let's just say we didn't have any sort of, I mean, you could have gone for 20 pips, I don't know. Actually, let's just watch it and see how far it goes. Because depending on, and that's what I was saying, like depending on how long you want to actually stay in the trade, that would determine when you would get out. This is an hour chart, so maybe you wanted to stay in it for, a couple hours. Maybe you wanted to really, milk the trade. So let's see. Okay, so at this point, so let's say, so we got in here, and then we got a, and this is just a example, right? It's going to change every time. But let's say you were convinced at this point that the market was going down, right? And so let's say you said, okay, I'm going to stay in this trade for 4 hours. Congratulations. 1, 2, 3, 4. Congratulations. Great trade, right? Even could have got a little bit more here, right? So, like I said, I mean, it really depends on how long you decide to stay in the trade, what your targets are, what your target profits are, what your take profits are. That sounded a little like I was repeating the same thing. But anyway, so, and you can see here where, this after what, how many hours were we in? And so let's say this was the 4th hour, 1, 2, 3, 8. After 10 hours, you would have given your profit back, right? So let's just play it out and see what happens. Or actually, let's just say, let's switch it up. Let's just get exciting here. So let's say when you put in your magical third, when it got here, because this was the 4th hour, let's just say you closed out that. Let's just pretend like this was closed, right? All right, so let's just say you kept that, right? But you still got these open. A couple ways you can do this. Either you can close them all out together, or you could continue to watch, and I'm going to tell you what happened. Okay, so you got this nice sized candle that actually closed back into the buy area, right? So let's see what happens. And remember, these two are basically locking in the amount. Whatever the difference is locked in here. Oh, nice. Nice action here. So this one would be really deep into profit at this point, and then this one would be really out of profit, right? So I like watching this because it's just like it's like a TV show. Keep going. Let's see what happens. So remember, we closed out here. So we're just waiting on a next opportunity. We're just waiting. We're just waiting. Actually, I mean, there's so many different ways to trade. That's why it's like it's hard to say, oh, trade this way. There's so many different ways to be profitable in trading. And so this is just another one to add to your arsenal, right? Now we're gonna cut it short, but ultimately you can see how in a short period of time, 4 hours, we were able to, make some profit there, and how you could technically have been in this trade. Let me speed it up because it's kind of like watching paint dry. All right, let's see what happens. Let's go. Let's go. Oh, now, whoa, hold on. Whoa. So let's say we were looking for an opportunity to buy, right? That's what I was getting at. Okay, so cool. So it gave us an opportunity for our magical third to be, here. Let's just say we saw this candle here and we're like, oh, well, it's really close to where I got in. And so that convinced you to say, this thing might go up. And so you got in, right? Look at what happened. So you can use this both ways. Like you can use it to go up or you can use it to go down. And that was literally what? So that was 4-2 and this was 2 days later. So you could have been in this trade for 4 hours one day and then came back and then, 2 days later, been in this trade. And let's just see how far that goes for 1 second. Oh. Oh, okay. Okay. So being in this trade, apologize, I got a text message. That always happens when I'm making these videos. Anyway, so could have been in this trade for 4 hours, right? That was the same time we were in it. So we got 1, 2, 3, 4. Let's get out, right? All right. So this would have been the candle that you got out of. I mean, you can see here, like, that's pretty legit. I mean, actually with this particular design, the way we were talking about like 60%, 66%, 50%, this would actually be 75% because you had, and when you close these out, it's totally up to you. But, at this point, if you were done with this trade and you were done with this market, you would want to close all this out because I mean, you could leave it open, honestly, because that even gives you a better opportunity to make money both ways, right? But I recommend closing them all out when you are done. So if you were done here, then closing them all out and then starting again, right? Or if you said, okay, well, I think this market is going up, but I wanted to get a little bit of this profit. You got that profit and you got out, and then you got back in like we did over here, and then went up for 4 hours and then got out and closed them all down. So hopefully this can be added to your arsenal to help you simplify your trading and something you can use. I mean, you can implement that right away and see if it helps you. See if it helps. See if it helps. But at any rate, check it out, Magical Third. You may have to watch the video again just to get through the paint drying part. But hey, use it. See if it works. If not, throw it away. All right. With that being said, peace.